Ladies and gentlemen, the Tiny DevOps Guy.
Hello, everybody. Welcome to another episode of Tiny DevOps, where we talk about dev and ops and all related topics for small companies. I'm your host, Jonathan Hall, and today I'm really excited to have special guest Rob Walling, who has been doing this sort of work far longer than I have. He is the host of a popular podcast, probably the first podcast I ever listened to, actually. Startups for the Rest of Us. He's also a founder or maybe co-founder of I'll let you describe it, but TinySeed. He runs a conference for small, mostly SaaS type companies, but I won't say too much. Rob, why don't you tell us your background and fill in the gaps that I left there.
For sure. Thanks for having me on the show, man. I appreciate it. Yeah, so TinySeed, you mentioned, is the first startup accelerator that caters to SaaS bootstrappers. And so our terms are bootstrapper friendly. And so we're kind of the not venture capital. We still invest in companies. We write checks, and we have a year-long remote mentorship program, advise, and all the stuff that you would want. We do it in batches too, so there's a community. And we are about 2.5-3 years in. We funded 60 companies, and we have money to fund another 150 or something in the next 3 years. So it's okay. Picking up, and that's fun, right? That, to me, this is kind of what I've been doing for free and on the side for like 15 years. And I finally get to do it, for a living. And then you mentioned Microconf, which started in 2011 and started as in-person events for software entrepreneurs. And now I think we'll run like 13 in-person events this year. And then we have an online community and a lot of resources, a YouTube channel and all that. So it's all around helping technical, usually technical. I'd say we about 80% like technical folks, because I was a developer, I used to be a developer, and my co-founder was a developer, and so that's where we started with like developers. But now we have 20-30% who are not, and it's helping them build startups, whether they're small or larger. That's what I've been doing for a while now.
Cool. So I think I was first introduced to you with your book. I read the ebook, Start Small, Stay Small. And from there, I learned about your podcast and your conferences and all that stuff. And that book is really, if I recall, it's written for developers who want to advance their career and their independence, right?
That's right. Yeah, the tagline is a developer's guide to launching a startup. That is literally like the subtitle of it.
And that's kind of been your vision all along, I think personally you wanted that freedom. I remember hearing you talk about it on your own podcast that you did the grind because you didn't want a boss anymore, if I'm not mistaken.
Yeah, freedom, purpose, and relationships are what I was seeking, and getting that freedom of like, hey, we're developers, we're makers. Like, I wanted to make interesting stuff and not be told. I didn't want to build stuff for other people anymore, and I didn't want to be told what to do it and how to do it. And so it's like being your own boss really is all it's cracked up to be. I mean, it comes with its own headaches, but I love it. I couldn't go back.
Yeah, cool. So I'm interested in learning from you, especially as you've now started doing investing, and I know you are an investor, but you also run the TinySeed and you work with other investors. I'm curious in answering a question. What do external parties, whether it be a potential investor or maybe you're thinking of selling your company, what are the things that they look for that we as small companies, small teams, even individual practitioners, what can we do from a technical standpoint, whether it's development practices or should we use Kubernetes or not, or does it matter at all? Right. Those sorts of things. So maybe we'll start with the angle of TinySeed. What does TinySeed care about, if anything, in that regard?
Yeah, it's a good question. And I think it's helpful to think through different layers of it, because investors do a different level of diligence than an acquirer does. And it makes sense, right? Because an investor usually is buying a super minority share of a company, 10%, 15%. And often an investor is investing in, it depends on, the fund, but it's like 10 companies, 100 companies, 500 companies. And so they have, I think, less time, but also less skin in that game than if they're saying, hey, I'm going to pay you millions of dollars and own 100% of this. And I have to own it and operate it from here on out. I adopt all the headaches, whether there's people headaches, you know, with a crappy team, whether it's technical headaches that I think you and I will dive into. Those levels are different. So and to be clear, like it took me a long time to stop identifying myself as a developer. I haven't written a line of production code in 7 years, so now I'm not a developer. But I still consider myself an entrepreneur. People tell me you're an investor now, and it's like, well, that's not how I think. I actually think like a founder, and I just happen to have budget to be able to write checks and advise people. But with all that said, TinySeed specifically, when we'll get, let's say, 1,000 applicants, right, for a batch, or 500 to 1,000. And then we narrow it down and we do 70, 80 Zoom calls. And then we wound up picking making 20 offers, and we get 20 people in. And we do due diligence, right? We then go through the financials a little bit. We go through, to make sure that that they have like what's it called? It's like a certificate with the state that says they're in good standing. You know, there's all this stuff. It's a big checklist that kind of you go through. Technically, we ask questions, but we don't like log into servers, right? We don't verify that, like, whatever. We don't do pen testing or like hire, an outside agency. And frankly, most investors don't, because it's a kind of a time thing. And also there's not as much risk than if you're going to buy the company and kind of take on the liability. What I will say though, is where DevOps and just the entire tech stack are important is in avoiding negative customer experiences. So it's like avoiding downtime, avoiding customer complaints, avoiding slow, performance issues. That's the kind of stuff that can come up in online forums if we search for the name. You know what I'm saying? In a light diligence, like if people are complaining about the tech, we will ask, like, what's going on with it? What happened? Why did you have a 2-day outage in May? And if someone can explain it, like, oh, well, it was a one-time thing and my web host went down or blah, blah, blah. And it's like, okay, but if it's like, well, we had this it's like, you kind of get into it. So what I'll say is the level of diligence for investors is cursory, I will say. And whether you use Kubernetes or not
nobody cares,
matter.
Right?
No, we don't care.
Yeah.
For an acquirer though, because I've sold a few companies, and one of them was a big sale, that they hired multiple consultants to come scan through our code base to look for open source stuff that might be a problem, where the license, I forget what all the licenses are, but right, you lose some open source components and suddenly the open source project owns your code base or whatever,
right.
Or you have to open source the whole thing, right? So they really want to avoid that because they're paying millions of dollars for something. So they literally scanned the code base. And then we did a big architecture walkthrough in front of a kind of a panel of engineers in front of a big whiteboard. Now, what's interesting is, and we did great because my co-founder is just a solid developer. And okay. I gave him the time at the beginning. Having been a developer, I gave him a ton of time at the beginning to set things up right. Even though we moved slower, we had this amazing foundation, right? And so we passed with flying colors. In fact, at one point, the lead engineer, or kind of the CTO, turned to the CEO who had been doing the acquisition. We were already right? We had the offer, we had the purchase price, it was all set. He turns, he said, I think their technical processes are better than ours are. And I was like, cool. Nice. So we didn't fail that. What I'm curious about though is if ours had been really crappy, would they have? I don't know if they would have bailed on the acquisition or not. Right. I'm doubtful. It would have had to have been really, really bad. I will say that later, and then I'll stop talking because I know you have other questions, but later on I was involved in another acquisition that didn't go through. I was on the acquiring side, I'll say, advising and such, and their tech stack was such a mess because it was 2 non-technical founders and they had a bunch of contractors doing stuff, and it was such a mess that we actually advised them not to buy it, and they didn't. And I can't say who I was advising. It's a little NDA stuff, but yeah. I have been a party to one. It was going to be a multi-million-dollar acquisition that was, 2 founders, bootstrapped, and the technical side of things was a major, major hurdle because it was not set up well.
Are you free to talk in more detail about that? I mean, obviously not the details of the thing, but like, what were the 2 or 3 biggest problems you saw there that might have changed your mind if they weren't there? Yeah,
and I'm going to have to go from memory because it's like 5 years ago, and I spent like 2 hours thinking about it, right? We did a call and then we were all like, it was like all right, do the vote. And we looked around a table and it was just all of us doing the thumbs down. But my memory is they had servers in like 3 different locations, or maybe it was even with 3 different, it was like they had AWS and then they had this one with this service for like processing of and it didn't make sense. It was like, why? And they really couldn't answer. It was like, why do you have these, why are you paying these 3 web hosts and like sending data across the kind of the open internet per se? What it should just be all AWS. And it's like, well, it's because when we originally built it, blah, blah, like it was really bad legacy architecture. And then the core of their business was using a component that was, it was like being deprecated, or a service that was being deprecated, or that company was starting a competitor to this service. Like they were going to start competing. Like it was this very odd. And these are things they could have coded around, or could have, like, if it was 2 devs, if it was you and me, like in my heyday, we would have figured it out, right? We would have combined everything in some servers because we wouldn't have lived with that tech debt. It was massive tech debt. Now, it turns out we did tell them, hey, this is why we can't go through with this. This is a huge part of it. And to their credit, they spent the next 6 months, they hired like a senior whatever, and they spent the next 6 months cleaning it up. And they came back and actually thanked us and said, our business is in such better shape now because of this. And in fact, our performance and our, they didn't have a lot of downtime, but our performance and whatever else is so much improved. And now we feel like if we were to sell at some point, we're just in a better place to do it.
Well, that's a nice ending to a bad story. So that's good.
Yeah.
Well, there's a lot of things, of course. I mean, DevOps, operations, software, these are all things that lie beneath the surface. As Daniel North likes to say, software is like surgery. The less you have, the better. Nobody wants software. They want a solution to a problem. They want to send an email to their client. They don't care about the server that sits in between. But all these things that we do, that you did as a developer, they lie beneath the surface and they manage that stuff. And although the problems, this sort of tech debt, isn't always visible to the end users, it can have an impact. And so I'm curious what kinds of impacts you might be looking for in at TinySeed or as an acquirer that you wouldn't necessarily point your finger to, that's a technical problem, but it could be. And so, like, some examples I can think of would be how frequently do you release to your customers? How frequently do they get updates to the software? Is that something that matters? Security concerns, of course, would be something. And you've already mentioned tech debt and uptime. So maybe I'll just stop at those two: security and like release frequency. Do those matter at all from an investment standpoint? Security
certainly does. Release frequency, I care about it because personally I have built software both as a developer and as an entrepreneur. And so to me, I know that's a signal, but I would say most investors don't care,
Okay.
In terms of how often you release. Again, they care as much as it impacts the business because they're buying a business that has, it's really numbers driven. Security is a huge issue though, right? With hacks, I've done 20 angel investments personally, my wife and I. And then we funded almost 60 companies with TinySeed, and I advise, and I just know a lot of entrepreneurs, and I have been an advisor to two separate companies that have been hacked, and to varying degrees, and it's really unfortunate. Now, the one company had already taken investment, and the other one actually, let me think. Oh, I guess both of them had already taken it. Being hacked, though, it sucks, but it's how you deal with it then, right? It's how you communicate it, it's how you resolve it, how you talk to your customers about it. But certainly security has a lot more liability than a lot of other things. If you release to your customers once a month and they're mad about it, fine, you could still build a great business. If your software or servers are insecure, you can literally end the company, right? I mean, you can put the company over the edge. So security is a big one, and it's something that investors care about, but it's not like they're doing pen testing or hiring people. Mm-hmm. So there's security, there's performance, right? Speed of the app and speed of any service you're using. And then there's uptime, like you were saying, reliability and uptime. And then I guess the fourth is quality, right? It's bugginess. Oh, sure. Some apps just get so dang buggy that, I don't want to name names, but I've literally switched software platforms because of the bugginess. I think those are the key indicators, that I think are going to, because those are, those are the ones that are going to impact your customers, and those are the ones that are going to cause people to leave, to churn, and then that impacts all your metrics, and impacts your ability to grow.
So will an investor look for these metrics specifically, or do they look for the? Are these more like leading indicators? They look for churn. They look for complaints on bulletin boards and whatever.
Pretty much, yeah. I mean, a lot, especially, it depends. So it depends, right? When you get to a Series A, which is like a big round, like a Series A is when you raised $10 million at a $50 million valuation. So it's a big number. Those venture capitalists tend to do more in-depth stuff, and I'm guessing if they're writing a check that big, that they would treat it more like an acquisition, where I would probably in their shoes hire a consultant to come and literally, look at your code base or scan it or pen test or just do some cursory stuff. There has to be that element of it. But most companies don't make it there, right? Most companies raise $250,000 from friends and family, or from an accelerator, or from an angel round, and the diligence there is less. And that is more of, hey, here's a slide deck with my numbers and the story of the company, and we're doing this much revenue and growing. And it's like, cool, I'll take your word for it.
Mm-hmm. Good. And then of course, when you're doing an acquisition, it's more similar, it sounds like, to the Series A type of diligence, right?
That's at least been my experience. I've only I've been a part of, like, I've sold small apps in the, where the exit price is in the six figure arena, done a couple of those. And that diligence was not huge, but it's when you get into the millions that it starts really mattering. And especially if you're going to acquire a team with it as well, right? It adds, because then you get into all kinds of stuff once you're bringing people on.
When you're consulting with companies, whether they're in TinySeed or they're asking your advice, what kind of suggestions do you have for them when it comes to technical practices? I mean, if they say, should we hire a senior developer or 3 juniors, or whatever kinds of things they might ask. We'll start really broad here, and maybe I'll narrow down. But what kind of advice do you give when it comes to technical practices to these people?
Yeah, no, that's a really good question, actually. The interesting thing is, in the kind of world that I live in, which is like the bootstrapped and mostly bootstrap software space, most of it's SaaS, but there are people doing other stuff. It's about 80%. Yeah, it's like 80% technical founders, 85% in that somewhere in that range, of where there's at least one technical founder. And usually that technical founder, oftentimes they have a good head on their shoulders and they are making solid decisions. Sometimes we do see where it's 2 non-technical founders, which is a rarity, or it's 1 or 2. And they, as a non-developer trying to build software, especially SaaS, which is pretty complex, we do see some struggles where it's like they don't know what Agile is, or Kanbans or Scrum, and I'm not a proponent of any of these, but it's like I do think having some system, I do think having what's it called, like retrospectives, and you do a sprint and this and that, like some type of way that you manage this is helpful. And if you've never been a developer, you just have no idea, right? So all that to say, there's a small subset where I do find myself, I don't directly coach them on, hey, I think you should set up a monthly sprint, blah, blah, blah. I'm not down at that level, but what I'll do is I'll connect them with a mentor who I know is really good at it. And I'll say, talk to this person. There's actually a few of our TinySeed founders themselves who run SaaS for Agile teams, right? There's one called Scatterspoke that is for Agile retrospective. So I would like connect someone to them and say, talk to these folks, and they will tell you. One of them is like a certified Scrum Master and does a bunch of speaking. Like, she can basically give you in 30 minutes, like 10 times more than I could give you, right? So we have a small subset like that, but it's pretty rare. By the time they make it to us, a lot of folks kind of have their head on their shoulders. But in terms of hiring, it's so interesting you bring that up, because that does come up a lot. I talk to a lot of founders, advise them or invested in them, who are basically making their first hire, right? It's 1 or 2 co-founders, and they've made it to $10K, $40K a month, whatever it is, and it's just the 2 of them and a few contractors. And so they're saying, I'm making a full-time hire. We need to alleviate some of the development work. I need a backup when I want to go on vacation. We need another solid person. And usually my advice is, for that first hire, hire someone more senior than you think you need. Because a lot of us, especially as bootstrappers, are penny pinching. I'm way guilty of this. And so I'm looking for the cheapest. Well, I can hire this developer for $40K because they're like entry level. This is gonna be great. Well, I think as you get bigger, there's room for that. I love apprenticeship. I love training. But when you're a 2-person company, you just don't have time for that. When you're a 2-person company competing and moving quickly, you need mid-level to senior people, and you should invest the money and spend the money to do it.
Mm-hmm. I would agree. I don't have the same experience you do, or the same depth of experience that you do, but I have cleaned up enough code bases created by juniors to agree that it's a well worth the investment if your business depends on that code.
I agree.
To have a senior.
And again, there's a time and a place for juniors, and it's when you have a bit more scaffolding, you have more devs. Like when if you have 3 or 4 developers, well, now you could bring a junior on because enough people can code review and make sure the quality is maintained. But when it's just you and you're sprinting as fast as you can, bringing someone on, 5+ years experience, even though they're a lot more expensive, it's a no-brainer early.
Yeah. When you're working with these technical co-founders, are they generally, I would imagine their first hire probably is not a technical person. They're looking for sales or marketing or something like that. Is that accurate?
Yeah, support, customer success, sales, marketing. If we have 2 developer co-founders who want to hire a developer, I will say, why? How complex is your product? Because unless you're just growing amazingly right now as it is, then why would you hire a 3rd technical? Oftentimes we have 1 dev, 1 non-dev who's basically doing all of that, who's doing everything else. And what they find is they're in a competitive space and it's moving so fast that they just can't ship features fast enough. And they do want to hire a dev as the first hire to both have backup, but it's like redundancy too. It's like if I do want to go on vacation, right? Or I don't want to feel like I have to bring my laptop with me everywhere all the time to make sure the uptime is sufficient.
I think you've answered the big question I wanted to address, which is just sort of get a sense for how much of these things matter to external parties if you're in that boat.
Yeah.
But I would like go ahead.
I will say one other thing. It's like external parties is one thing, and that's obviously important if you're going to raise a round, if you decide that you're going to get funding, or if you're going to sell as well, that's important. Mm-hmm. But also, if you're going to run this business for a decade, like some folks want to bootstrap and run it for 5, 10, 20 years, you shouldn't care about what external parties think. You should care about what you're going to have to put up with. And can you find good talent if your code base sucks? If people will quit. I mean, the bottom line, I have known companies that churn through engineers because the code base is so crufty and there's so much technical debt that no one wants to work in it, and it's just constant, like, make a change here, get a regression, a bug somewhere else, because there's no code, there's no test coverage, right? Or minimal test coverage. So your ability to hire and retain people in the long term, and then your feature velocity as well, just plummets after. You're doing great in the early days because you're shipping all this stuff with no tests. Look how fast we're moving. You get a year, 2, 3 years in. If you're thinking about building a real business, you can't do it with a crappy code base or it's hard to do because your feature velocity slows down and then competitors catch you. And we've seen it, right? I mean, look at whatever big tool that everybody complains about, Salesforce or I don't know, Infusionsoft. I could name a few, and that's what happens, right? They started early days, oftentimes with no technical co-founder, and that code base is rough. And so no one wants to work there. They have to pay a lot more to keep engineers as well. Combat pay, because it's like, it's not a fun place to work because it's like, everything's breaking all the time.
Right. Yep. Good. I would like to talk a little bit more about what you're doing these days, because I do think that what you do is likely relevant to many of the listeners, not all, but many. So you did talk about it briefly in the introduction, but do you want to give a little bit more introduction to what Microconf is and who should be interested in attending, and then maybe TinySeed and anything else you're working on?
Yeah, no, I appreciate that. So, our tagline, I'm going to the website right now because you know how you change your H1 often enough, you forget it. But Microconf is where bootstrap SaaS founders launch, meet, learn, and grow. And it started as one in-person event in Las Vegas in 2011. And it was me and a co-founder just bootstrapping this event. And we had no idea what we were getting into, but we wanted to get together with other people who wanted to, it was pretty much software developers who wanted to build products that they could make a full-time living from. And that was the early thing. It was like, we don't want funding. I think the tagline for many years was the conference for self-funded products or self-funded startups. Now, later on, we realized there's a lot of folks who are still of that self-funded bootstrap mindset who maybe go raise $100,000 or $200,000 to make it easier, right? And that's you're still mostly bootstrapped. You're not going on this. You're not going after Facebook and Google, and you're not trying to become a unicorn. And so we've had to adjust that to where we still say bootstrapped or mostly bootstrapped. But now Microconf is, like I said, we do we're going to do like 13 events this year, COVID willing. And there'll be 3 kind of flagship events where there's a large one in the US in Minneapolis, and there's one in Europe in October. We don't know location yet. But in addition to our in-person events where we get together with folks, we also have an online community of about 2,500 bootstrap founders. It's free. It's called Microconf Connect, and that's in Slack. And so if someone's interested, you go to microconfconnect.com and apply. We heavily moderate it. We have a community manager, and that's kind of a free service we offer to because we didn't see any really good bootstrap. Well, there are only a few really good bootstrap communities, and we wanted to help folks with that, with the guidance and everything. And then honestly, our YouTube channel is pretty good. It's like 300 videos. It's a lot of conference talks. It's for people who want to start software companies, and it's youtube.com/microconf if folks want to check it out. And then what we noticed, I'll lead us right into TinySeed because they're sister companies if you think about it. What I noticed is that as Microconf and as bootstrapping SaaS just wasn't really a thing in 2011. There were a handful of SaaS companies that we knew about. There just weren't that many. But as the years went on, it became obvious that this idea of bootstrapping and bootstrapping SaaS specifically was evolving. And I saw more and more founders start to raise small amounts of funding, 100,000, 200, 300,000, and still keep that bootstrap capital efficient ethos, and be more ambitious maybe, but not hop on the venture track. And so I had an exit. I sold a company, and then I started investing in these founders. And I had written maybe 10 angel checks, and I was kind of like, okay, that's kind of all the money I have to invest in bootstrap founders. That's great. So now I have to wait 10 years for the return. And I kept getting people saying, well, someone should really raise a fund and do this for more people. And I remember someone coming up at a conference at a Microconf, and I said, yeah, someone should really do that. And then I kind of walked away. And then an hour later it clicks, wait a minute, that should be, if someone's going to do it, it should be me. So I didn't want to raise a fund. I've never raised funds in my life. I bootstrapped every company. I was never anti-funding, but it wasn't something that interested me. And so I found a co-founder who's really good at it. And so we started TinySeed, which is an arm of Microconf that invests in bootstrap founders. And it's an accelerator. Like I said, it's a year-long remote program. We actually have applications that I think are open now as this episode goes live. We have our Americas program, so it's North South America. And then we have, this is our first application process for European time zone founders. So EMEA, right? It's a Middle East, European, and Africa. I'm excited about that.
That's exciting.
Yeah, it's pretty cool.
Great. And then you have, of course, your podcast too that I mentioned early on.
Yeah, folks listen to this podcast. They're interested in entrepreneurship. They might, because ours has a slight technical bent. It's that we don't dig deep into the code and the stuff, but there's always that hint because you can't take that out of me as the host, right? It's like, that's how I think about things like an engineer. Cool. It's startups for the rest of us if folks want to check it out.
Great. We'll have links to all of that. Rob, if anybody's interested in reaching out to you, are you open for contact? And if so,
sure.
How?
Yeah. Probably Twitter might be the best. I'm at Rob Walling, and folks can, my DMs are open.
Great. Well, thank you, Rob. It's been educational. Is there anything you would like to add before we sign off today?
No, I just want to thank you for having me on. It's been fun.
Thanks. It's been a lot of fun for me too.